What's up, everyone? This is Quese.Trades here. Today is March 3rd, 2022, and today we're going to talk about some trades that I took today. Today was a pretty good day. Today's Thursday. Um, let's start off with some statistics. So right here, you can see I use an app called TraderSync. This is my trading journal. This is how I document all my trades. So we can see today is March 3rd, 2022. My return for today was $899, 100% win rate. So I only traded one ticker today, which is SPY. Um, and it was a good trade. So let's kind of break down some of the details on. If we go back here, we can see that my return on this trade was about 40%. At one point, this was about an 80% gain, but when you trim out and you scale out at different levels, on average it was 40%, but at one point it did reach 80%. Depends on the contract. But let's break it down. So, looking at my trades today, I traded SPY. Um, I bought a total of 11 contracts for a total cost of $2,234. My average entry price was $2.03. My average exit price was about $2.84. My return per contract on average was about $81, which is about 40%. So I traded SPY put today that expired tomorrow, March 4th, with a strike price of 435. My first entry was at 637. I purchased 10 contracts at $2.05. So for a total value of $2,050. And then I bought one more contract at 640, and it was at a price of $1.84. So I kind of averaged down a little bit just on that one contract. So you can see here are all of my exits. I exited at 655, at 201, at 717, 225, 723. I scaled out. So at each point that I was either hitting a support level, because I'm trading to the downside, the support levels are going to be my profit targets. I would scale out of my position. So you can kind of just here take a quick glance. I don't want to dive too much into detail on this. I'm going to get into the charts, but you could just see all of my exits here. And my final exit was at 8 o'clock. So in total, this trade was about an hour and 30 minutes or so, more or less, of trading. So that's not bad. You make your money, you get to enjoy the rest of your day. And me, I have a normal job. So after I'm done trading, then I just start my normal job. So let's get down to the charts. Ignore that. Perfect. Okay. So let's look at SPY. So this is SPY yesterday. So, when you go into the day, you want to make sure that, you have all your levels drawn. If we want to zoom out really quick, we can go to the daily time frame, right? And shout out to Quese.Trades. He really improved my technical analysis game. And if you're looking at this at the daily time frame, it's gonna look messy, but when you first start marking your levels, you want to start with a clean chart. So of course I have my EMAs. Red line is my 21 EMA, blue line is my 9 EMA, purple line is my VWAP. So as we can see, I start with this. And so I draw my level, I find my key levels, support and resistance levels, right? And then after I do that, that's how we get here. So if we look at SPY over the last couple of days, we had a large bounce at this very, very bottom here of 411. We had a very bullish candle here. They had a gap up and another bullish candle here. And then we had another bullish candle here. And then we had a drop down, had another bullish candle. And then today we had a drop down here. So let's look at yesterday's price activity before we get into today. So here are some key levels that I have on SPY: 431, 47, 432.85, 434, 25, 434.73, 435.59, and 437.97. And you can see how SPY pretty much respects these levels, you know. So I had this demand zone here. So you can see we had a strong push to the upside to start us off for the first 50 minutes of trading. We tested this resistance level here. We got a doji candle. We had a small, well, it wasn't necessarily small. It was about from 434 all the way to 432. So $2 pullback, but we still bounced off the 9 EMA and VWAP. Got a strong push up, rejected resistance here. Had a strong drop here. And this is on 5 minutes. This is a big 5-minute candle. And yesterday I did lose pretty big yesterday because see the support level at 431. I had entered a large put position in the money at the money contracts. And what I didn't realize yesterday was that it was the Fed meeting. And so another thing that I should have taken a look at is look at the momentum here. You can see here on the stochastic slow. I'm not sure if you guys use the stochastic slows or not, but it's momentum oscillator. So it kind of tells you the momentum that the stock price is moving in. And we can see this large dip up right here. And we start to gravitate back towards this high buying pressure. And as well, you can see that the K, the moving K, because it's like you have the slow D and the slow K. You can see that it was still pretty close to high buying pressure. So bad entry for me. But anyways, we had a large push up. We opened at around 431 and we pushed all the way to 439. So that was about like it was like an $8 gain. So me knowing that, usually when SPY has very big gains or losses in one day, typically it kind of tends to reverse the next day. So it kind of gives up some of those gains or it recovers some of those losses. So looking at pre-market, we had an after hours drop down to VWAP. You know, we kind of had some scattered price activity and we had this very, very, very large push up. But what you want to pay attention to is pre-market. Look what happened to SPY at 441 or around. You see, I have this resistance level here. So at this resistance level at 441, we rejected. And if you also take a look at our stochastic slow right before market open, which is about right here, we had a crossover on the stochastics. Usually when you see a crossover on the stochastics, it's just like seeing a crossover on the EMA. So that means that there is a momentum shift that is going to occur because usually the stochastic slow, it'll cross over. So it's really good indication of where price is headed because this happened in pre-market. As you can see, we had the crossover right like at 6:15. So 15 minutes before market open, we had that crossover because look at the following candles. Um, you see how we had red, red, red. So it was like, okay, this is a potential reversal here from this large push right here from 437 to 441. So I traded the 5-minute chart today. So I just want to go over what I was seeing on the chart on the 5-minute, and then I'm going to zoom in on the 1-minute where you can see I have ovals for all of my entries and exits. So on the 5-minute, I got into my first position at this level here at 439.51. And the reason that I got into this position right here is because look at this candle here. We have a kind of a big wick here from 440.84 to about 440.50. So that's about what 30 to 40 cent wick. And then we close red. So we opened here, we closed here. So buyers tried to push the price higher, got rejected, we closed here. And then we had this candle here. Now, technically, this was a bad entry because although we did break support, usually when you break through a support or resistance, you kind of want to wait to see how it's going to play out. So in this sense, if you're thinking about this trade, you would say, okay, you want to look for puts because we're going to the downside and we broke through support. However, you want to see if buyers are gonna step in and push price up at that support level. So I was kind of early to get in and I went in heavy about 10 contracts here. However, I decided to hold because one thing I noticed is that our EMA started diverging down a little bit. So I told myself, I bought out of the money contract. So I'm gonna tell you guys something that works for me. And the reason I know it works for me is because when I changed my strategy, I started losing. So I like to trade out of the money contracts. So if you look at the option chain, right? If when you look at this, 432 for either puts or calls, well, for puts, 432 is like at the money, and for calls, 433 is at the money. Or for no, yeah, 432 is at the money for calls, and 431 is at the money for puts. So if you realize, if you look at the deltas on these, you can see the delta here is very high. The delta is going to be higher when you trade at the money, which means your premium on your option contract is going to be more sensitive to price change. So one thing that I noticed is that I like to trade slightly out of the money contracts because, for one, they're cheaper, which means that we're trading in a very volatile market, so there's going to be a lot of price changes. With that being said, there's going to be big price fluctuations. So um, when we notice large price fluctuations, if you have a whole bunch of at the money contracts, your stop losses might get hit and you might stop out of your position. So when you trade out of the money, you can hold longer through price fluctuation. So, and also one thing you guys want to do is you want to look at the volume and the open interest. I traded these 435 puts today. Look at the volume, 263,000, and the open interest is 20,000. So this volume tells you how many contracts are being bought and sold, and 20,000, the open interest tells you how many contracts have been opened that are not closed yet. So that's why I decided to purchase the 435 puts. Now, when we zoom in here, like I mentioned earlier, right? This was my entry, 10 contracts here. Boom. The price does reverse, buyer step in, push the price up. However, this is a doji candle. You can see it's green. However, we have a kind of a wick at the top and we have a wick at the bottom. And so when I noticed that, it lets me know that buyers haven't completely overpowered sellers, because if that was the case on this 5-minute chart, we would want to see a bullish engulfing candle, or we want to see consecutive green candles pushing to the upside, and we'll be going back to test this resistance. But and then also, key point, guys, when it comes to price action, you want to look for higher highs and lower lows, right? That's going to be the indication of uptrend. However, if you're looking at a downtrend, you want to look at higher lows and lower lows. Now look at what happened right here. We made a lower high. Our high was lower than this previous high. That was my indication to stay in this trade, right? Now look what happened next. A lot of people would have got stopped out right here, because look what happened. Price opened here. They tried to push price up. We broke through resistance, but we did not hold, right? And so we had a strong rejection from this level, and we closed. We went from 441 all the way down to 439. That's like a $3 move. So once I seen that, I said, okay, I know that sellers are more aggressive than buyers at the moment. We also got a crossover on our EMAs, so we can see that, right here, we got a crossover of our 9 EMA and VWAP. Once I seen that, that was my indication to hold my position. So we got to push down here. We got another doji. When you see a doji candle after an up or downtrend, that usually tells you that the trend might reverse. And look what happened. Boom, we got to push to the upside. But once again, look closely at the highs. They are consistently getting lower and lower. We look here, right? Look, boom, boom. Our highs keep getting lower and lower. See that? lower, lower, lower. Same with that was our highs. Now look up our lows. Lower, lower, lower. So that was like, okay, this is a downtrend. So I bought another contract here because I figured I wanted to size up just one more contract just to try to get a little bit more profit. We had this push up, and then look, we got a strong rejection again. And then this is when sellers completely took over the market right here for spot. Strong push to the downside. And look at this trend. This was a complete downtrend all the way from 440, which was a strong resistance level, and we ended up going all the way down to 434, which is huge. So I rode this position all the way down and I scaled out along the way. So also I want you guys to be able to realize this. You got to know your pattern. So this is a bear flag, right? A bear flag is when we have a strong push down and we have a consolidation up, and then we have a long push down again. So we have a bear flag here. So seeing all these things live, these are my indications to either hold my position longer or get out if we see a bull flag or anything that goes against my position, right? So let's zoom into the 1 minute. So get a closer look at all of my entries and exits. So we can see here that first entry here, right at this support, right? We go up, we test the 21 EMA. That's why I purchased another contract because then we quickly reject the next candle. However, we keep going up. And some people, if you would have had to stop, you would have got stopped out right here. But that's why sometimes when you trade option contracts, you sometimes don't want to set hard stops because these option premiums move very quickly. So sometimes you kind of have to use a mental stop loss. You kind of got to like know in your head how much are you willing to lose, and you got to monitor your option contract. That's why I use active trader because I can monitor the price of my contract while I'm in my position. And so now this is all the positions that I'm in, right? So boom, once we break through, and you can actually see the bear flags on the 1 minute as well. You see bear flag, strong push down, consolidation up, and then we break through. This acts as support. When you draw your trend line, they're diagonal and they act as a diagonal support and resistance. So we pass this level, break through, and then look, we get a bounce right here. It looks like some buyers stepped in. I sold my first contract. Still holding. We get a push to the upside. We get some consolidation here. We buyers try to step in and push this price up, and they get rejected. Sellers step in, dominate, push the price down. Look again, another bear flag. One thing I've noticed in 2022 is that bear flags and bull flags are some of the most high probability patterns that you can trade. Bear flag, strong push down, consolidation to the upside. We break through, strong move to the downside again. Another bear flag. Look, bear flag after bear flag. Another one. Strong push down, consolidation up, we break down. I sold another one here. And if you're wondering why did I scale out of another position here, look, we're at a support level. Your support level becomes your price targets when you're trading puts to the downside because the support level is a price that buyers will be interested in buying and they probably will overpower sellers. That's why they call it support. It's supporting the price from no longer decreasing. And that's why we say this is resistance because at this price, this is a price that people who bought at the bottom will like to sell. So the price is going to have a hard time getting past this point because this is when sellers like to sell. Boom, I sell here. We have a bear flag, break through the support. And then we come down here, I sell again because this is a large drop from 437, 437.88 to 437.33, about 40 cents. Sell here. Look at another, and this is an extended bull flag. See this right here? This is a I mean, not a bull flag, excuse me. This is a bear flag. Look at this. You can see here, bear flag again, bear flag after bear flag. drop down, consolidate within this channel, right? Break, strong move to the downside. I sell here after this. It's 1 minute. 1, 2, 3, 4, 5. Sell here. Take profits. I'm scaling out. We come up. We test our 9 EMA. I sell again. If this could have kept going, right? This price could have found some buyers, and this could have went to the upside, and I would have sold all of my contracts depending on the volume, right? If the volume was very high, I probably would have sold another one right here. If it was a reversal, then I would have probably got out of my full position and took profits out 437. However, look, seller step back in again, put to the downside. I sell right here. I sell another contract here. Why? Because we're nearing a support. There's potential for price to bounce. And look what happened. We have some buyers step in, and that's what made me want to sell another contract. I didn't know what was going to happen next. You don't, when you trade, you don't know what's going to happen next. All you have is your technical analysis, which is giving you a probability of what may happen next, right? Sell, we get a strong push to the downside. We break the support level. So that means sellers are still dominating this market right now. So I sell again here. I'm taking profits. I'm taking profits. I'm scaling out one by one. But you don't want to sell your whole position because there's potential profits that you could be missing out on. And we're trading with the trend. We get the strong move to the downside. Right here would have been the best time to sell another contract, but I didn't. And then we get a strong move up, strong push down, and then see, look, we bounce at the support level. That's why it's very important to draw your support and resistance levels, and you have to draw them accurately because when you trade, you want to have trust in your levels because you trade based off your levels. So if you have trust in your levels and you draw good levels, that's going to be your profit targets. That's going to be your stop losses. That's going to be your entry and your exit point. We get up here close to this resistance level, and since this is resistance, right, we are in an uptrend. I ended up selling right here. I could have been more patient to see if we were going to break through this resistance, but I just didn't want to chance it because I think actually this was my very last contract, and I decided to get out of my full position for a $900 gain, which is great. Look what happened. We ended up pushing further down to the downside, and in my mind, I was thinking that maybe I wanted to hold a runner or two, which means that you scale out. Let's say I have 10 contracts, I sell 8. Maybe I was thinking I should hold 1 or 2 to see where we end at the end of the day. However, I just didn't want to risk losing any of my profits because I was already up. So I decided to sell my last contract here, and look what happened with the market. We ended up pushing back up to the upside, a strong push back up to the upside. So let me go back to the 5 minute. So look what happened. Crazy thing is that the Fed was talking, and I guess no, it wasn't even the Fed. The Fed did talk today, which caused this big downtrend, but there was news that came out. So if you guys are trading, you know that the news has been affecting the market a lot. Like I feel like in 2021, you can really rely on technical analysis because there wasn't very much news happening. Like it was pandemic related news, which was affecting the market, but the Fed was printing a lot of money. So it was mostly in an uptrend. If you look at a chart for 2021, we were mostly in an uptrend all year. However, this year, this market has been so volatile because there's been so much outside variables outside of technical analysis, which has been affecting the market. We have inflation, we have interest rates, now we're in a war with Russia and Ukraine. So some news dropped right here. Right here. Some news came out. I believe it was Russia, Russia and Ukraine are having negotiations, and I believe, Russia and Ukraine agreed on ceasefire momentarily so the civilians in Ukraine can evacuate because there are reporting that a lot of civilians in Ukraine are getting killed by the bombing that's going on. So the Ukrainians are advocating for their civilians like, hey, Russia, can you please allow our civilians to exit the country because you are killing them with your bomb. So Russia agreed to cease fire. So once that news came out, that's positive news. That's how the market interpreted it. Look at this candle. If you were in puts right now, you were sweating bad. This went from 435 all the way up to 439 and 5 minutes, which is crazy. That's a very large candle. If we look at it on a 1 minute, look at this. Boom. One, two, three, four, five. Five candles. And this, they're just huge, you know. Very look at the volume. So moves like these are we got a crossover here too. So much indication that this is going up. And moves like this is so hard. You can't predict them because I mean, if you're a really technical trader though, we are at the support level at 435. So you know at this level there's potential for buyers to step in. And you can see even on the 1 minute, look at these wicks. These wicks at the bottom tell you that they keep trying to push the price down, keep going up. We had a doji, at an up or down trend. After an up or down trend tells you that there's high indication that the trend might reverse. And we had a crossover at the stochastics right here. Boom. So that happened. But by this point, I was just watching the market. I wasn't in any positions. But what I want to show you guys, which is interesting really quick, is this pattern, which I'm starting to see a lot. This is a huge fake out. So look at the activity here and here. You see how we had this huge candle to the upside. Then we dropped, we pulled back. Now this is kind of making a bull flag, right? So if you're a technical trader, you're looking at this pattern right here. Bull flag, right? Strong move to the upside. And we're going down, down, down. We go find some support usually, and look what happened. We did shoot to the upside, and then we got a strong rejection here. Boom. So a lot of people at this point would have gotten in puts. We broke through the support. This is a large push to the downside. A lot of people would have got into puts, but look what happened. Buyers quickly from this drop quickly stepped in. Look at these wicks. Next thing you know, the same, almost the same. The push to the upside was bigger, but look what happened. Up, this bullish upside candle really dominated this downside movement right here. So it's like it made a downside, big downside push, and then we kind of were stagnant for a little bit, but we were starting to go up, but it was kind of like up and down, and the strong upside move. So you would have got faked out twice because if you would have bought right here and got puts, you would have lost money on this upside move. If you would have came here and bought calls off this one candle, you would have lost money because look what happened next. Straight downtrend all the way down. So with trading, you have to really be patient. One thing that worked for me, which I really, I'm trying my best to stick to, is to not trade on the smaller time frames. Like trading on the 1 minute and 2 minute is good, really just for scalping. Like if you really want to get out of your position quick within seconds, seconds usually, or like a minute or two max. But in today's market, there's so much price swings that it's just a little bit more profitable to hold your trades for a little bit longer because the market has either been bleeding throughout the day or it's pumping all day. Back in the day, like the first 2 hours of trading, that's where all the volume was in the market. So that's why they were like, hey, it was okay for you to scalp a lot because you can get big moves early on in the market and then the market would just die out for the rest of the day. But in today's market, it can bleed all day or it can pump all day. So to maximize your gains is it's kind of more beneficial to hold your contracts a little bit longer. However, for you to be able to stomach the price fluctuations, you want to trade out of the money contracts because when you purchase those at the money contracts, they're going to be very sensitive. Those high deltas are going to be very sensitive to price fluctuations. So you won't be able to stomach, especially if you got a large position. I was in a $2,000 position. If I had at the money contracts, I could have been down 30, 40, 50% quick. And it's like, okay, well, I didn't set a hard stop. I use mental stops. So it's like, you're just in a bad position. But this was the only ticker I traded today, guys. It was SPY. It was a good trade. I'm really happy about it. At the end of the day, you never know what's gonna happen. Uh, you never know what's gonna happen, you know, after market or pre-market. So when I told myself I wanted to hold, it would have paid because look what happened. Some news came out that again, it's always the news. You just don't know, you know. I guess Russia, they are attacking a nuclear plant in Ukraine. And, that's not good because nuclear, it can be radioactive, it can cause some fires, it can cause some explosions. So that's not good news. That's not a good sign of this war. And look what happened. We had a big drop down from 436 all the way to 427. So my 435 puts would have really been in the money, you know. It's always a what if. I could have held my whole position if I can tell the future, I would have held all level of my contracts and I probably would have made a lot of money more than I made, but you just don't want to take those risks because you don't know. So the market right now is down. Um, I'm definitely going to be keeping a close eye on SPY tomorrow. Tomorrow is also ODTE, which means all contracts will be expiring. So it's going to be very volatile. The premiums are going to be cheaper, but it's going to be very volatile. So I'm not going to be trading. Like, I won't really be looking too much at the bigger names. I'm not too sure. I know for sure I'll be watching SPY. I'll be watching QQQ, of course. Um, I'll also, be watching Tesla. Tesla, you would have made a lot of money on Tesla if you would have traded it today. I didn't touch it. And also Amazon was down bad 80. It was just $83, So, and if you look at these charts, I want you to really pay attention to these charts because they are very, very, very similar, right? You have to really pay attention to you have to really pay attention. So we got Amazon, Tesla, right? We got Amazon, we have Tesla, we have SPY, and we have QQQ, right? I just want to show you why it's so important to pay attention to SPY, because SPY, a lot of because these are Amazon and Tesla are big weights of SPY. So they're gonna react to SPY because they make up a big portion. SPY is just the index, which is made up of all these stocks, right? And QQQ is made up of almost just the same amount of these big stocks like Tesla and Amazon. They're tech, they're also in QQQ. So these charts move very, very, very similar to each other. So see here, here, here. And you can see like, I'm gonna take off the lines. I can't on QQQ, but you get the picture on this. If we just look at a 5-minute chart on each of them, right? I just want to show you guys how similar the charts are. Look at it. They all had this one candle when that news came out to the upside. Amazon went from 2982 to 3014. SPY went from 435 to 438. Tesla went from 851 to 861. QQQ went from 342 to 346. So you see how these charts are very, very similar. So paying attention to SPY is very important. Also paying attention to QQQ because these are the main indices, the ETFs, and they will dictate most of the stocks that are within these ETFs will move the same way. So yeah, guys, tomorrow I'm going to be looking at Amazon, Tesla, SPY, QQQ, and NVIDIA. Those are going to be my main tickers I'll be watching. I'm going to be very patient, and I'm not going to trade with a lot of risk. On Fridays, you can make a lot of money or you can lose a lot. And I'm going to be honest, I usually lose a lot on Fridays because I get greedy. So I'm going to be patient this Friday. I'm going to take my time, and I'm going to be happy with the gains that I get, and I'm going to cut my losses quick and not let it I have a, sometimes we're traders, we get emotional, we hold a trade too long. If it's in the red and if you're losing money, cut it. If it's in the green, you're gaining money, don't be greedy, secure it. So yeah, guys, this is the end of the video. I hope you guys like this trade recap. I'm going to continue posting content for you guys. I'm doing my best to educate myself and educate, the people who are following me so we can all learn and grow together. So hope you guys have a good rest of your night. It's 8:14 where I'm at right now in Los Angeles. And tomorrow is March 4th, Friday, ODTE, and let's make some money. So have a good one, guys.